Hi everybody and welcome to TorFX Weekly Market Update. I'm Nathan Braid. I'll be your host. It's the 1st of August 2016. It's Newsweek. We've got interest rate decisions coming out on the Aussie dollar and of course the pound sterling this week, along with the US jobs report for the month. We're going to break down all the major news events and of course what to expect for the week ahead. But first, let's take a look at the worsening US economy. Currency markets have been relatively quiet over the recent weeks as money starts to flow into the bond market and the precious metals market. There's also been a swath of data that's been released about a continued weakening US economy. So we're going to take a look at that first of all, the news that came out last week. And we can see here, first of all, the US home ownership rate fell to its lowest levels in more than 50 years in the second quarter of 2016. Some are suggesting it may be a lingering effect of the housing bust, or is it a negative side effect to the Fed printing money and it not reaching the middle class? Also last week we saw US GDP figures coming out, and the figures for second quarter were appalling, coming in at only 1.2%. That's less than half of expectations. Durable goods also disappointed, falling 4% in June versus the 1.1% drop that was expected. This has now been 17 months of declining durable goods orders, and we've never seen that happen unless, of course, we were in a recession. Let's go and take a closer look at these figures. We can see here that the durable goods orders coming out in a negative 0.5%, and that would mean that the data has also been revised down on previous months. And as we move through, that's 17 months in a row, as I mentioned. And if we look at the federal funds rate, of course, that remained unchanged, unsurprisingly, based on the data. And then we had unemployment claims still up fairly high at 266,000. And then when we look at the actual GDP figures, you can see they're disappointed at 1.2%, but I think the devil is in the details. So if we take a look at the previous quarters, we can see they've all been revised down. What we're looking at now, literally over the last couple of years, is 1% growth on the US economy, which means that when the Fed decided to raise interest rates in December, it was based on the fact that the data was saying it was good enough. Well, that's all been revised down now. All right, let's go in and take a look at the news for the rest of this week. Well, it's a big week ahead with economic data coming out, starting last night with the US dollar ISM manufacturing PMI disappointing at 52.6, along with construction spending in the US now going into negative, and ISM manufacturing prices are in fact falling. It does make you ask the question then, with weakening services sector and of course the weakening manufacturing sector, how exactly are we near full employment? But today it's going to be all about the Aussie, so all eyes are on building approvals, the trade balance, and of course our inflation expectations, which will be followed at 2:30 this afternoon by the cash rate on the Aussie. The prediction is we are going to see a drop, as we are in this age of currency wars and we do want a weaker currency, and of course the Aussie was in fact weakening this morning. A drop down to 1.5% is the expectation. This will be followed then by an RBA rate statement. This evening after the London Open, we'll have the pound coming out with their construction PMI. As we move into Wednesday, we will have more data coming out on the pound with the services PMI, along with the automated version of the non-farm employment change coming out on the US at 10:15 Australian Eastern Standard. But it's all really going to be about Thursday and Friday, as we have more of the, this time we get the non-manufacturing PMI coming out on the US, as well as retail sales on the Aussie. Then it's about the pound in the evening, so we do have the official bank rate votes which are coming in, suggesting there's going to be a drop in the interest rate on the pound potentially. We've got a monetary policy summary, and of course the official bank rate will be the big one. We're looking for a drop from 0.5% down to 0.25% on the pound, and of course the Bank of England Governor Carney, he will be speaking. This will be finished up on Thursday by the unemployment claims, which are still extremely high, up around 265,000. And then the big news, of course, for the month comes out on Friday. So it'll be all eyes, of course, will be on the average hourly earnings on the US, as well as the non-farm employment change. At this stage, we're really only looking for 180,000 jobs created. And I think the big thing I'll be looking for is this 287,000 from last month. Will we see a revision to the downside? And the unemployment rate at this stage looks like it's actually going to improve, believe it or not, regardless of all the poor data we've seen, up to 4.8%. Well, that's all from me. I look forward to speaking to you all next week. This is Nathan Bray, TorFX.